Click-clacking.
All right, guys, we are live with our monthly broadcast. It looks like we've already got people that are ready to watch, which is awesome. Tonight, I am coming to you with all the tax information. It is getting close to the end of tax season where taxes are due and you got to have it done. And if you're a small business owner, it stinks. There's never enough information. There's never enough time to do all the things. So we want to make sure that we can definitely bring you a little bit of peace amid the chaos. And so today, I can see Mallory in the background. She's laughing at me. So we are bringing Mallory Erwin to you. She is an amazing CrossFit owner, and she is also my sister-in-law. And so she gets major props for being married to my brother. But we're going to bring her on now, and I'm going to share a little bit more with you about who she is. So we have Mallory with us today. She is a really smart accounting guru. She does all of this for her own business with CrossFit. And so we are going to go ahead and get started with sharing some of the best tips for bookkeeping after I let Mallory introduce herself.
Okay, well, I'm Mallory Erwin, as she said. I have an accounting degree from Shorter. Spent the first part of our married life doing taxes, mostly individual. I ended up actually being a manager for Nation Block in Valdosta at the ripe age of 22, and then had babies, and then the gym kind of fell in our lap about 3 years ago. So my husband and I took that over, and that's when I kind of got back into a little bit more of my background in accounting. Bookkeeping was never really my favorite thing. Oddly enough, taxes was my favorite aspect of accounting. And right after college, I did CPA exam, all that stuff. We just had babies. So
amazing, wonderful babies. I love them.
Yes, wonderful babies. So for me, bookkeeping wasn't super overwhelming, but I usually set up some good guidelines for myself. So it's really more of like consistency. Find something, a schedule that works for you. Is it every Monday sitting down doing the week? For me personally, I do better if I do monthly, and I actually prefer using my paper statements, which I tend to make fewer mistakes with my paper statements, but some people might not still have. I know it seems archaic, but I can visually check off, okay, I've put this into my books, all of that. I use QuickBooks. I'm comfortable using QuickBooks. Yeah. And,
love it.
And honestly, I recommend maybe you could even audit a college class on it, or get QuickBooks for Dummies if you haven't done QuickBooks. It can seem overwhelming at first, but it's worth it. You can pull up reports super fast. You can see where your money's going. You can see your bottom line. And that's what I enjoy about that. But yes, finding that schedule that works for you. You may enjoy using your online statements. And also QuickBooks offers a online system. I use the desktop again because I'm old school and archaic, but you can use the QuickBooks app that links directly to your bank accounts, and it will actually help you. All you got to do is organize what that purchase was or what that money was. So that was really my best ones. But if you're not comfortable doing bookkeeping, I really suggest finding someone that can do it for you, because you have to think about how can my time be used the most efficiently. Am I making more money doing my business and not doing my books? So that's something to think about. Honestly, even for me, I'm seeing in the next 5 years, I'm probably not going to be doing my own books. I can see my value is spent more in the gym and not sitting behind my desk doing that, because it gets a little boring after a while. I used to love it, and now I dread sitting down and having to do it. So that's another good thing too.
Yeah, yeah. For those of you that don't know, Mallory doesn't just sit behind a desk and like check people in and own the gym and just kind of clock out at the end of the day. She's actually a CrossFit coach, and I believe you're still competing in
No, not really so much because of life, but
yeah, yeah. But in the past, she has competed in different CrossFit events. And so it's not like she's just kind of punching a time clock and checking out again and has all the time to do all the paperwork. So I love the fact that you're saying, even though you have that knowledge of bookkeeping, that eventually that business is going to grow so much and make y'all so much money that you can just say, here you go. I don't want to do it anymore.
Yeah. And I think that that's something that, if you have a professional, they can find things that you maybe don't know. Like even in the last 3 years, I found out so many things that maybe I learned in college, but you only learn so much in college. It's really the real life experience where you learn the most. And so in the last few years, it's been educational, and I've definitely made my mistakes and learned from them. So hiring a professional that's been doing that can save you probably thousands in the long run. So I recommend that. I know it's not always in the budget for some people, which is totally fine. That's why I recommend either getting that QuickBooks for Dummies, maybe auditing a class at a community college. You probably can find one. I mean, it's probably pretty common. I don't know anymore, but that's something that I definitely recommend, especially as you get bigger.
Yes. The more money you make, the more you are open to audits, open to making bigger mistakes. So absolutely. Okay. So here is one that I always find fun. Things you can't deduct. And I'm sure it's a rather large list. So we're gonna stick to just the big ones.
Well, we've had some changes, with our new tax code that's done a couple different things. The first thing it really got rid of was entertainment expenses. For someone who, and I don't know if this really applies to anybody, for taking out people interest for entertainment purposes, you can't deduct anymore the cost of, like, say, concert tickets or things like that. However, if you do go to a fundraiser that's for a charity, you can deduct those.
Oh, wow.
Another thing too is some people confuse like the clothing aspect. So we can deduct uniforms, but you can't deduct things that you can wear every day. So if you're talking about like a business attire, you can technically wear that every day. But if we have like a branded uniform, that's something that we can deduct. And I think some people get that confused.
Oh, yeah.
Sometimes I've definitely seen it. Another one is commuting miles. So we'll talk about mileage in a deductible sense in a little bit, but commuting mileage, that's going from your home to your office. That's not deductible. But if you maintain a home office and go to a place and meet clients, that is, and we'll talk about it a little bit. Another one that's interesting is fines or penalties you do pay to the IRS. Those are not deductible. So are like state taxes. We know when we pay state taxes, like it fines penalties related to that after the fact are not deductible. But taxes we do pay, and it gets a little complicated. I won't get too crazy in that, but like when we owe, let's say for me, when we owe the state of Georgia, I can't get I can't deduct what I have to pay the state of Georgia beyond what was that we included on our returns. Does that make sense?
Yeah. That makes sense.
A little bit crazy.
No. I think that's good.
And then we do know that meals are only 50% deductible. I think some people.
Yes. Yeah.
It's a big one.
Yeah. And so something that we have been told, so we're going to ask you to kind of clarify this one, is so Jason and I, he works as my office manager, and I know you and Cameron work together. So let's say the two of you go out to get coffee. You're married, no kids around, so it's technically a date, but you're talking all about the office stuff and who's working when and schedules and things like that. So is that technically something that you can deduct because it's a work-related meeting, or is that kind of that gray area of?
It's a gray area. It's one of those that I would definitely write down, okay, on my receipt, what we just discussed that day. And honestly, most people see the tax code as very cut and dry. And honestly, there are more gray areas than you really expect. It's whether or not you can say, okay, you can really justify that. So it's really how aggressive or how conservative you want to be. I'll leave that up for people. So, I mean, it just depends on how you, so if I were to put that into my books, QuickBooks, and I put, it was a meal, which I guess it really wasn't. It's really how you classify it. So when I go in and do my taxes, there's a line for meals. So I'd have to actually create a line for that, which we would say business meeting. Then you probably could. But if we classify it as a meal, then we're going to be thrown into that 50-50. So it just, but then you have office parties are 100% deductible. So it's a very large loophole. And honestly, that's what I do.
We have a child's birthday party at the CrossFit. Is it an office party?
We have, like, for my coaches, usually 2 or 3 times a year we get together. We talk. I mean, we talk about the gym. I get these guys ribeye steaks. I get them beer. I get them there. And to me, that's it's a meal per se. But this is also a business meeting, so I write all that off. It's really just how you classify it. And then to me, I would have no issues talking to an IRS agent saying this was 100% about business, because it is. So it's one of those, it's like, what do you feel strongly enough about that deduction to be able to justify it to the face of an IRS agent? And that's kind of what you have to think when you do.
Absolutely. So any other things that we can't deduct?
Other funny thing, which we'll also talk about in the deductible sense, is capital expenses. So if we go and buy equipment, generally speaking, we have to depreciate it over the life of that item. So some people just think, okay, this is an expense. Well, no, it's not actually an expense all in 1 year. It has to be depreciated. However, this kind of segues into our deductible ones. There is something called the Section 179 deduction. So if we have tangible items that's used in your business, you can elect to take the entire amount in the tax year that you purchased it. Or if you feel like it's more, we'll say, 2 years ago, we bought $10,000 in rowers and weights. So I had the choice of either depreciating that over the life, which is kind of weird because it's not like the IRS has a life for rowers and weights. So I had to do a little of a guessing game there. So I could either depreciate that equipment over the 5 years as general, or I could choose to take the entire deduction that year, which I did because it made more financial sense for me. So that's one thing about having an expert that can help you kind of project your future to see if these decisions are the best one for that tax year. But for the 179, that's one that a lot of people don't know about, I don't think, because it seems kind of technical sounding, and it is. And there are caps on it, but it's like $1 million of assets you can purchase. I mean, you're talking about really big numbers. But that's a great way to, if you have a phenomenal year and you just have just a massive amount of profits that you kind of want to squash a little bit, that's a way you can do it. Go ahead and buy equipment at the end of the year, take the full deduction. Now, 179 is not permanent. It could go away anytime. So usually anything I've read, it says if you can take it, take it. So that's just something that's kind of interesting. And another thing is too, we talked about commuting mileage not being deductible. Well, when we go and meet with a client, or like I do, this is my little 8x8 area that really is my home office. I do all my admin for the gym at home, mainly because I have little kids. It makes sense. And I'm typically driving to the gym, just to kind of oversee things going on there. But I do all of my emailing, calling, for my little 8x8 space. So every time I go to the gym, I do that. That's my mileage. I have a great app that I like, but there's other ones out there. It's called Mileage IQ.
We love
Every
that
time I get in the car, every time I get in the car, it starts it. And then when I get to my location, I can swipe left, right, decide if it's personal or business. And even it has this great little thing when you go personal, you can flag it as medical. And I have kids that have medical issues. So we put at least 500 to 1,000 miles per month in medical mileage. So it's a great way for me to keep up that for my personal and also my business. And let me just tell you, I did a lot more business mileage than I ever guessed I did.
Same
so
here.
It was really it was really eye-opening because I used to guess every year, like, okay, go to the gym every day. It's 20 miles round trip, blah, blah, blah. But then I'm not counting about, okay, today I ran to Home Depot to grab some stuff.
Yes.
That's business mileage. And just stuff like that. So that was fun. But it is something that you have to pay for. It's either $5.99 a month, or you can pay $59.99 per year. I like to save money, so I just go ahead and lump sum it. But that's a fun little one. As for other deductible ones, let me look at my little thing. We talked about our 179. And this is interesting. I know I've talked to you about it before. It's not really things you can deduct, but it's talking about incorporating your children into your business. So prior to the new tax law, our standard deduction was like we'll just say $6,500. Well, with the new tax code, they've actually increased the single person standard deduction up to $12,000.
Oh, wow.
So what that means is you can pay your children, and this is for legitimate work. I say that. This is not just funneling money. This is for legitimate work. So if you have, like for me, and we're still using Monopoly money at my house, but when I take my kids with me, I clean my own gym. I don't pay anybody to do it because I don't think anyone ever does it just right. So I have one of my girls, she helped me mop. And so she earns like device dollars or whatever it is because they're 6 and 5. So they're earning their money, but when they're 10, she can push my little scrubber. She can earn money that she can pay for things that she wants. So that's something that if you're interested in that, definitely talk to a professional. Make sure you're doing it right. That just means that under $12,000, your child under the age 18 does not have to file a federal tax return.
Which is awesome.
Yes. So, and it's most people don't use this. It's 100% legal. It's not, as long as we can substantiate, okay, I did, my child, ask your child, did you help, your mom and dad, what did you do? And so as long as you have some kind of like set parameters, okay, $8 an hour, and you did this on this day, I would keep good records, but it's 100% something that you can do to mitigate, especially in our self-employed world, some of that self-employment tax. So that's, and I'm looking towards when my child wants to go to prom, well, girl can earn that money to get that dress and get that limo and whatever it is. And we're learning that value of money. And we're able to just really teach our kids young and also kind of save a lot of tax in the process. So that's something that most people don't know about. And honestly, I didn't know until, in the last year or so.
Oh, yeah. When you told me, it was like, who can I tell?
It was just sad because it seems like it can't be real.
Yeah.
But it is. And I've read it on several things on, of reputable places that is one way that you can really utilize some tax savings. So that's really my big 3. Oh my goodness, the big one. The new tax code.
Yes. New tax code. Tell me.
So the new tax code, they added we'll call it small business deduction. Something to kind of realize is it's 20% of your profit. So you get a deduction for 20% of your profits. If you're familiar with your 1040, which you probably might not be, it's not going to affect your adjusted gross income, your AGI at the top. It's probably going to replace your personal exemption on line 42. So it's called between the lines. So, I'm not going to go into detail on that, but it affects the amount of money that you're paying tax on.
Oh, wow.
So that's huge. There are some restrictions in terms of, like there's some cap outs, and it's like, I think 315 for married couples, 157. But that's for specific industries. So that's our doctors, lawyers, and finance people. They are the ones that are really strictly capped. I think other small businesses, there's going to be a loophole. Again, with the new tax code, we can't say too much until we actually see those tax forms. And let me just tell you, they're not going to be out until probably late January of 2019.
No, which means everybody who is a small business owner is going to be scrambling if they wait till the very, very end.
Yes. Yeah. And so I'm a partnership. So my taxes were due last week, which that's usually the pain in my side. But but that's huge. I'm really excited about that one. You should, I don't know what software you use if you go to a professional for it. I don't know.
We do our own. Yeah. We do our own just because ours is really funky. Because we're usually not only filing in the state we're in, but the state we were in 6 months ago because of a military move, which I know a lot of people in this group deal with as well sometimes. And so we have just found it easier right now to do it ourselves. But we're getting to the point where we're kind of done with that.
Yeah. Oh, yeah. I know it's fun. Well, Kane was in Virginia for 4 weeks last year. So I had a Virginia return to do, and I have a Georgia return to do. And then we have so it's definitely with moving, it gets complicated. And there are a few changes to the tax code on that. I don't know if anybody's seen that. The moving expense has kind of gone away. You can still do it for military moves though. That's like your little loophole on that one. I did look that one up. That's about, I think, all I have for our.
Those are great ones though. I mean, those are really
I kept trying to keep it simple.
No, you're good. You're good. All right, let's see here. So we talked a little bit about apps or tools. We talked about MyIQ. We talked about QuickBooks, which we do the online version, but we did do the desktop version. It's really easy to use.
To be kind of off topic, but how was your switch from desktop to online?
It took a little bit of time to switch over from desktop to online for QuickBooks. I think the biggest issue that we have with the online version is that there are certain companies that will be picked up as a duplicate. And so we were getting, if I went to the post office to mail a box to my bride, we would get duplicate things registered in the QuickBooks. And so we'd have to kind of pick through or wait about 2 weeks to do that week's and just bring them in to import them in.
That's what I had. I tried it and I just, it was too much. And I had to, I had to just delete it and just go back to my desktop. Eventually, I'll set aside like a month. When things calm down, whenever that happens, never. But we like it because, if I'm on the road, if I'm like next week, I'm shooting in St. Louis for a whole week. So I have the capability of being able to pull up QuickBooks online versus doing it on the desktop. So that is definitely helpful. For those of you that are popping in and joining us, we're talking about apps and tools that help with taxes. I've seen a couple people hop in here real quick. MyIQ is one we talked about earlier. We've talked about QuickBooks online versus desktop. Are there any other tools or apps that you really like that help make things easier? Those are the only ones I've really used. I'm a paper person, and I don't know why, but I like real books, not books on my phone. That's just what speaks to me. So I have paper copies of stuff, but I'm sure I don't know if y'all have like a receipt app. I just keep every receipt because I'm crazy like that.
Yeah, and so for those of you that are watching, yeah. There's a way to scan them. There's a way to put them on your phone, and so there's options for that. If for those of you that don't like paper and don't want to have to kind of keep a shoebox under your bed of tax receipts
or filing cabinets all around me, you can't see them, but they're here.
Yeah. So those are some great apps. Those are some great tools. We use them for our business too, and so. Here's one that we hear people kind of talk about, and recently, with the changes, S Corp versus LLC is becoming more and more similar, and so there's kind of a lot of questions swirling about as to whether or not it's valuable anymore to be an S Corp or to just stay an LLC. So from a tax perspective, not the legal.
Yeah, I'm just saying there's a lot. So we'll just start from sole proprietor. We'll be real simple. Sole proprietor is the super easiest way to start a business. You just need a business name, a business bank account, and some clients. So that could be, decide I want to bake wedding cakes. We'll just go there. I don't know. And I opened my business. I got some clients. I bought my materials. I baked my cake, got my money. At the end of the year, I am going to file a Schedule C, and I'm going to take all my profits, all of my expenses, and I'm going to get taxed on all of my profits. And I'm also going to pay self-employment tax. So typically, you're a self-employed individual, and you have all the liability of any endeavor that you go into. So that's your big con to a sole proprietorship. So it's easy. The barriers to entry are easy. There's not a lot of legal stuff you have to go through. Really, there's not any. You can just kind of do that, but you don't have any personal protection. Your assets aren't protected. And that's where you have your LLC and your S Corps. So when you become an LLC or an S Corp, you are a legal entity. So it's not you anymore. It's now this entity. You have limited personal liability. And the differences between LLC and S Corp, there's a lot of differences, but they seem very similar. All three of these are what you call flow-through entities. So all the earnings that you get from any of these flow directly onto your 1040. This depends on how you're structured. So you can have actually a single member LLC. So that could be me. I decided to make my bakery or my wedding cake business a legal entity. Or I can decide to let my husband join, and now we are a partnership. So we have to file with the state for an LLC or an S Corp. For me, I have to file with Georgia, pay $50 a year to maintain my business name. And that's another thing too. When you legally create these entities, you have to find a name that has not been chosen, which was actually very difficult for us. I think we went through like 5 names, which is great. Because then when you Google, okay, it's just me now. That's one of the benefits of finding that that name. And also you're going to get an EIN, so a tax. Oh my goodness. Tax ID. There it is. You're going to get your own tax ID for your company, which is great. So when we're talking about like LLC and S Corp, LLCs have members. You can have a managing member. You can have unlimited members. An S Corp, you're limited to 100 shareholders. I mean, I don't know if it applies to us. So, and then we're talking about, sole proprietor is our least formal. LLC is going to be right there in the middle, and then the S Corp is going to be super formal. So LLC, you're not required to keep minutes. You're not required to have bylaws. You're not required to have any of this. So that might be for someone who is has a couple maybe family members that want to invest and be a part of this company, but you're really the one that's doing, the wedding, the cake making, or whatever it is. Generally, once you start making considerable profits, there is reasons to go ahead and decide to be an S Corp. And some of those are that you can, so say you make $300,000 in profits. With an S Corp, we'll just say that you're only legally, you can legally, you're an employee. You can say you're an employee of the S Corp. You have to pay yourself a reasonable salary.
Yes.
That's going to be W-2'd. You're going to go ahead and pay your part, the employer and the employee parts of your FICA and FUTA, whatever it is. But then you can decide to take, so we'll say our salary is 120. The rest of it, the 180, if we don't have any other members in our S Corp, we can say that that's unearned income. So we're now not having to pay self-employment tax on this. So it's kind of like your interest, your dividends. In terms of, we'll just say unearned in that respect. So we're saving money by not having to pay self-employment tax. So that's a benefit of the S Corp. We are more formal. You have to have bylaws. You have to have you'll have officers and directors versus the LLC. You have members. So there's a difference there. You have to have minutes of meetings. You have to issue stock. So that's kind of something.
You have to issue stock.
It doesn't have to be public. You just have to issue stock of some kind. So that's your part in the business, if that makes sense.
Yeah.
Which makes it easily transferable versus an LLC. You're going to have to do a little bit more work to transfer your LLC to another person. Okay. So with that, it's some benefits to really have to say, okay, if I'm making $50,000 a year, is it really worth it to be an S Corp when we'll say I pay myself 40 and I'm got 10 of, is that worth all of that work to do the minutes and do these meetings? Generally someone's going to be making substantial profits, to really kind of benefit from the S Corp. So that's, kind of an overview. There's a lot of little nitty gritty things.
And there absolutely are, but I think that kind of clears it up a little bit. There's always some confusion, especially with new business owners, as to what it is. And we do have some questions that I'm going to ask you in a minute from people that are watching. Because things you were saying were sparking questions like crazy. Yeah. So this is, you're going to be fine. So that's where we're going to kind of go through these and throw them up here. And, okay. So first one, my husband's downstairs watching this too.
That's delightful. Okay. So if you have filed a tax return, generally it's 3 years. If you have not filed a tax return, I believe it's 7. They can go back 7 years.
Okay.
So
file your taxes.
So file your taxes. I like to do audit statistics, which I think it's very low. Generally, your statistics go up considerably once you make over $200,000, and then once you make over, I think it's like a million or something insane. It's like your chances increase astronomically. Okay. So most people under that $200,000 mark, it's going to be a random audit. It's not going to, or unless you just had something that was an absolute flag, like your charitable contribution was statistically higher than most people in your income bracket. Those type of things will spark flags. But generally, if you're following, your industry standard, then if you get audited, it's probably random.
Yeah. All right. So go ahead.
I don't know if it changes with the new tax code. I don't think so.
Yeah. I hadn't heard anything about it changing with the new tax code, but again, there's still a lot that we won't know. Honestly, the new tax code, the people who are going to be, most people are going to see a positive benefit. It's only our single unmarried folks with no kids that are going to see maybe a little, they're going to be paying a little bit more tax or something like that. But the brackets have changed. I mean, we can look at it. I haven't really ran numbers because we're really not going to really see the effects until this time next year. Yeah.
But this tax code is only good until 2025, and then it's up for
change again.
Yeah, changes always.
All right. So let's see here. Let's see. I'm going to put this one up here, and I'm going to go ahead and read it because there's a lot. So she said, Katie Ellison said, because I just got home and popping in, I'm sorry, did you guys already talk about how much of what we make should be saved versus spent back into the business versus what is play money, probably to like buy new gear? So that's a really good question because as for me as a photographer, for you guys as, owners of a gym, there's always that latest, greatest new gadget that everybody wants. So
I don't really have percentages. My philosophy in my business is to always be moving, not be stagnant. So we do purchase stuff regularly. But at the same time, we purchased this business from someone else, someone's little story. So it's almost kind of lease purchase type of deal. So our main focus was to get rid of our debt as fast as possible. So I haven't officially written myself a paycheck yet. I get benefit from the gym. Absolutely. Like I get a lot of different things that it makes it worthwhile for me. And I love what I do. So that really helps. Yeah. So that's been our goal. And I know generally that first couple of years, if you are in the black, you're doing great. So, and we have been we've not really had a negative month, which we shouldn't. But and this is my philosophy, you have to spend money to make money. And that's the thing. You can't just reach a point where, okay, I've got everything I need. You do need to constantly update and reinvent yourself. That's kind of where we are. And CrossFit's been kind of around like 10 years now. So that's kind of mine. We do the CrossFit thing, but I'm seeing this big picture of how can I rebrand myself and get these other niche little things into my business. We have this umbrella of CrossFit. They do all of the advertising for us, but how can I promote personal training? How can I promote kids programs? What do I need to change and invest in my business to really create these programs that allow me to do what I love to do, which is the CrossFit aspect. So I don't really have percentages.
I think it also depends on like what your income is, what your business goals are for the year. Because it is easy to say, you've got to spend money to make money. You do have to invest back into that business. You do have to fix things that get broken. But there is a point where there are some business owners who are not being financially responsible. So that there's that good balance between got to spend money to make money. You do have to make improvements and even educate yourself. Because I know for you became a certified, pardon me if I'm wrong, certified CrossFit coach because that time investment and probably that financial investment is a good thing for you guys.
Yeah. I mean, I got my level 1, like it's level 1, 2, 3, whatever. So I got that one originally before I even dreamed we would own a CrossFit gym. It was just one of those oh, wow. Like I would love to coach because we were in Valdosta at the time. I'd love to coach. And maybe if I get my level 1, they'll let me coach and then all of that. And so it was the great decision because 2 years later or 3 years later, we owned one, which it seemed unreal because it's kind of a saturated market, especially in our hometown. So for me, I just get the next certification so I got my level 2 last year. And I invest in my guys. Every time, like I go halves with them on certifications because they're anywhere between 800 and 1,000. So that's kind of like, so our gyms around here usually have problems getting coaches. I don't have any problems. In fact, I sometimes have too many. And that's because I try to treat them as best as I can. And you have people who love to work for you, which brings in great clients. And at the end of the day, you make more money by investing money in them.
Exactly.
So that's another thing too. I'm a very conservative spender. So I say, I should probably caveat that. So I'm not out there just spending money. Actually, he's not really a spender, but in terms of like the gym aspect, he's like, hey, let's get another rower. And I'm like, okay, calm down. We have to think about this. But yes, there's definitely, Yes, a balance is very important.
Okay, so we have a couple more questions. Katie said, what is the order you have to do to get an LLC? Because, so Katie moves, Katie's moved frequently.
Okay.
Katie, I'm not sure how many times at this point. I know we've talked a lot about it. But she says, I have to register my business in multiple places. Does having an LLC moving across states affect it at all? And this may be more of a legal versus a tax. And so we are looking at potentially having a lawyer come on, not as your lawyer, but come on and
I would say that would be state to state for sure.
Okay.
And that would not be something I'm super familiar with.
Yeah. And that is an extra headache. And she said so far she's moved 3 times. So
I can imagine. I'll do that.
Yeah. Oh. So that may be more of a legal question that we kind of bring a lawyer on here to answer that. So, all right. Let's see here. And it's okay if you're a sole proprietor. If if you're moving a ton, and if you know that you're moving, say you're in one place for a year and you're moving to another place for 2 years, and then you're moving again, it may be more of a smooth transition to stay a sole proprietor if you're not making 6 figures. If you're not feeling like you need that huge legal protection or tax protection.
Well, and I think and really honestly, before that's more of like, okay, I decided to take a $10,000 loan out, and I took a personal loan versus taking a business loan. And that's what I mean by liability. Your personal assets are liable to any creditors versus in an LLC or a S Corp. You have that protection where they can't come after your personal assets. So sole proprietorship is totally, it's super easy, and it's a great way to start a business. Yeah. It's when we start getting big equipment, we start leasing stuff, that we really want to have that protection in between our house, our cars, all that good stuff.
Yeah. Oh, absolutely. Okay. So this one's pretty big and it's going to cover the whole screen. So I'm just going to read it. But we had someone say, I was told that maybe have your business name be Catherine Grace Ellison Photography, but then I can have multiple companies under me, like Simply Grace Photography, and then Katie Design if I want to do graphic design. That way I can do taxes under my Catherine Grace Ellison Photography, but then I can change what I call my website or brand.
Well, that's 2 different options. You can follow a DBA, doing business as. So my LLC name is C&M Erwin Enterprises LLC, but my DBA and Cam did that.
Oh, yeah. Okay.
But our DBA is CrossFit Pulse, so I can put CrossFit Pulse or the long blah 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 that I just said. So that's one. It's fictitious name is what it's called. It seems really sketchy. But fictitious thing.
Okay.
A DBA. So doing business as. Yep. And also called a fictitious name. Yeah. It's weird. But that's what it is. That's the thing. It's something you can do. Also, LLCs can own other LLCs. So that's something you could do too. Again, we could talk about your kids creating LLCs. I mean, that's another rabbit trail another day. Yeah. I can't even fathom some of that. I would really have to walk through it to be able to tell someone how to do it. But that's another option. But when we talk about an S Corp, S Corps cannot be owned by an LLC.
Which would make sense because that's that kind of.
Yeah. So LLCs can own multiple. And in fact, let me double check because I think they might not be able to have. I think I wrote it down. They cannot be owned. Yeah. By C Corps or LLCs. Yeah. But they can own LLCs.
Okay. So that I feel like we
it would be kind of financially straining, I think, to have multiple LLCs unless you're really making a lot of money individually. It would probably make sense to have one company and then you have 3 different sections of that LLC or whatever. But it just depends on your situation, honestly. But you'd have to file with your state for all 3, and then you'd have to get a lawyer. I mean, I got a lawyer when we did ours. It just filed with the state. He got us a tax ID, all that stuff. So that's just something to pull out.
So I feel like even though Jason and I do our own taxes right now, I feel like even with the small amount of time we sat here and talked, that there's so much more that we need to look into and think about. And I know that, oh geez, my husband, so for those of you that are watching, Jason is watching too, and he chimed in and said, "Woohoo, child labor." So
not advocating that.
No. However, if you do have a child who is like ours, who is 8 and who is really interested in earning money and is starting to ask when he can go on photo shoots, and when he can, can I hold the bag? Can I do this? Can I do that? Which is fantastic. That's where these are great things to know, because he is not a saver. We want him to learn to be. And so that is a great way for him to have a job early on and to learn that whole hierarchy up for us of, put some aside for this, and then you have a little bit of spending money and you pay yourself and you save a little bit and keep doing that. So I think that these are great bits of information. Before we sign off, I want to just see if there's any other questions that we, have from people watching. Of course, you can always shoot me an email, shoot me a message, and ask me stuff later, and either I can answer it, or if it is way out of my wheelhouse, I'll shoot Mallory a text and see if she can help us out. All right. It looks like we are good on all the questions. Mallory, thank you so much for taking the time out of your very crazy schedule. It's crazy. To come on here tonight and share your wealth of information. I know this is going to be super helpful to everybody, whether they are watching it right now, which they are, or whether they're tuning in later to watch it and catch up later. So thank you so much. Yeah. All right, guys. Have a wonderful evening.